In this video, I'm going to teach you how we're going to trade with moving averages. Moving averages are very powerful indicators, but most traders don't know how to use the moving averages correctly. Once they use these moving averages incorrectly, they get bad results. So they start saying that moving average is not a good indicator. So let me show how we're going to use moving averages. See, today's Monday, a huge gap, roughly like 200 pips gap. This market opened. Over the weekend, there were huge developments in the Russian-Ukrainian war. The Russian army, as you know, has invaded Ukraine, and fighting is going on, and Ukrainian army is giving tough resistance. So last week was very tumultuous for the financial markets. This is the H2 chart, 2-hour chart. You see, first market went down 300 pips, then it went up 200 pips, and then today it has opened up a 200 pip huge gap. So if you had opened a trade, long trade, you would have instantly suffered a 200 pip loss today if you had kept it open over the weekend. Now, this is how I use moving averages. I just use moving averages to determine the trend. If the slow moving average, this is the 18 SMA, is below this fast moving average, which is that 4 SMA, I say the trend is up. And when it is down, this fast SMA is below the slow SMA, I say the trend is down. If I want to go short, I'll wait for this fast SMA to go down, and the price should be below this fast SMA. This is how I open my short trade. In the same way, once I open a long trade, I like this. I want this fast SMA to be above this slow SMA. Fast SMA is 4 SMA and slow SMA is 18 SMA, and the price should close above this thing, fast SMA. There is a huge move. Never trade against the direction of this moving average. If you had opened a long trade, you see this moving average is showing a downtrend. So you are taking a counter trend trade. It's always dangerous. And see, you would have been chopped today. Market opened with a huge gap. There are a number of moving averages on this MT5. We have got a simple, we have got exponential, smooth, linear weighted. Simple is just the average of the past prices. For example, if we are using 18 period moving average, then it's just average of the last 18 prices. Exponential is a bit gives more weight to the recent prices. Smooth is also like that. We smooth the price. Linear weight is also that. Don't over optimize your trading. I always use the simple moving average. It's the best. You should also use simple moving average. Using these exponential, smooth, linear weighted will not give you an edge. All are same. So this is how we're going to trade. We're going to only trade, open a long trade when this fast SMA is above this slow SMA, and we're going to only open a short trade when the fast SMA is below this thing. Now, how do we? There's another thing that I add to it. See, when this fast moving average, the difference between fast and slow average is increasing, we say that the trend is getting strong. When this distance decreases, we say the trend is getting weak. Let me show this thing. Euro dollar. This was euro yen. This is now euro dollar. See, huge gap. Today market opened with a huge gap. The trend is down and you had taken a long trade, you would have been chopped. Because over the weekend, the huge weapons have taken place. MACD is just the difference of two moving averages. It's nothing complicated. MACD is a very simple indicator. It's just the difference of two moving averages. When the moving average distance increases, it shows a red line, which means the trend is getting strong. So the last week, when this was the point where the President Vladimir Putin ordered Russian forces to start military operations in Ukraine, and see, instantly price started going down. But you can find these type of candles before also. So how do you know that this inside bar candle is significant? You wait to you increase the odds in your favor. This is how we trade. See, at this point, the momentum is getting strong. There was a huge, this was inside bar, then a huge candle that shows, this confirms that the price is reversing. You see, we have got now a strong downtrend bar on MACD. This is the point where we could have made an entry with a 5-6 pip stop loss, and we could have easily made 200 pips. Now at this point, you should you should have avoided this long trade, because this trend is still down. Those who have taken that long trade would be regretting today, because this is just huge price gap. So two things we do. First, the moving average should be the direction of the trade. Means if you are looking for a short trade, slow moving average should be above this fast moving average, and this MACD color should also be red, showing that the momentum is going down. Then we open a trade. See here, we could have easily captured 200 pips. Trend is going strong up. Fast SMA is above slow SMA. We could have easily made a strong trade over here, 200 pips. So this is how we go to trade with moving averages. I hope you like this video.